Welcome to the Cardinal Commentary for the Foreign Equity Portfolios. Global equity markets faced a challenging first quarter as the outbreak of the Iran war rattled investor sentiment. Germany's DAX fell 7.4%, while the S&P 500 declined 4.3%. A handful of markets held up. Japan's Nikkei 225 rose 3.8%, and the UK's FTSE gained 3.3%. Chief Investment Officer Evan Mansard tells us how Cardinal is thinking about geopolitical risk.
Our advice on the Iran war is similar to how our advice always is on wars, is to stay invested. The headlines are very scary, and there is some economic damage that can occur. But if you look at the history of most wars, whether it's Ukraine or Israel or way back to the two Gulf Wars, markets tend to do just fine. And so our advice is to stay invested.
Artificial intelligence continues to drive one of the largest capital spending cycles in modern history, and Cardinal's portfolios are built to capture that opportunity.
This is one of the largest capital spending periods in the history of the United States. I think you've got to go back over 100 years when the highways were being built to get anywhere close. And so now you've got the major beneficiaries of the AI, a lot of the Magnificent Seven companies competing with each other to see who can spend the most money. We're probably going to be well over $1 trillion coming this year. And all that's going to the companies that help build these data centers and provide the energy.
This quarter, we're featuring Entergy and NextEra, two utilities that sit at the intersection of AI infrastructure demand and reliable long-term income.
Entergy is a vertically integrated utility based in the southern U.S. In the states it operates in, like Texas and Arkansas, we're seeing a significant number of data centers being built, and Entergy is poised to benefit from the build-out of these data centers over the long run. NextEra is also a beneficiary of the data center build-out in the U.S. through its segment NextEra Energy Resources, which builds and operates power generation and storage assets such as wind and solar. It has a huge backlog that should benefit the company into the future.
At Cardinal, we remain focused on owning high-quality businesses at reasonable prices, companies built to perform through any market environment. And here's the proof. If you had invested $500,000 in the Cardinal Foreign Equity Portfolios in 2002, it would be worth more than $3.6 million today, compared with about $3.4 million for the MSCI World Index. And why do we do all this? Because it works. And that's the Cardinal Commentary for the Foreign Equity Portfolios. Thanks for joining us.